Madam Speaker, today we will take a historic vote on the most significant reform to our financial industry since the New Deal. These comprehensive reforms will reduce threats to our financial system, increase oversight, and prevent future bailouts. The bill strikes a responsible balance, ending the Wild West era on Wall Street, while laying a new regulatory foundation for long-term growth, which is stable and secure. In the fall of 2008, this country was brought to its knees by a financial crisis, the likes of which I hope we never experience again. A crisis of this magnitude calls for reforms of similar proportion. Many elements on and off Wall Street contributed to the meltdown, and this bill carefully crafts responsible solutions in each area. The bill through the creation of a Consumer Financial Protection Bureau that will oversee the rule writing for banks and non-banks and serve as the primary watchdog for consumers. For the very first time, non-bank entities will have federal oversight, a critical element to reining in abusive practices and products. An oversight council is established under this bill to make certain financial institutions do not become a systemic threat to our economic stability. We establish a process to close and liquidate significant financial institutions, so if a failing firm begins to fail, it is closed and it will no longer be too big to fail. This dissolution mechanism ensures Main Street comes first, not Wall Street. We deal with hedge funds, credit rating agencies, mortgage reform, executive compensation, and investor protection in this bill. We bring these issues out of the shadows and into the light so there is transparency to protect the system. I work to ensure a study on high-frequency trading was included in this bill. As we saw from the flash crash in May, when the Dow Jones lost nearly 1,000 points in a matter of minutes because of computer error, we need to know the effects of technologically advanced practices such as high-frequency trading have on the long-term investor. Also, transparency will be brought to the derivatives markets. Businesses and manufacturers will be able to reduce their own risk while protections are put in place for the overall system, providing regulators with a clear picture of the derivatives market. Another important provision in the House was strengthened in conference. It calls for strong limits on proprietary trading, or what most are calling the Volcker Rule. This provision strikes a good balance in banning proprietary trading without disrupting client services and asset management. In other words, banks can no longer gamble with their customers' money. The bill we are considering here today ensures there is no place to hide by closing loopholes, improving consolidated supervision, and establishing robust regulatory oversight. I'm proud to stand here with my colleagues today providing for consideration of a bill making the necessary reforms and establishing robust regulatory oversight. In this bill, we protect consumers, taxpayers, and depositors. I urge my colleagues to vote in favor of the rule and the underlying bill, and with that, I reserve the balance of my time.